Welcome to the Nifty Trade Setup channel. Um, this is about Nifty Trade Bearish Setup 2. So before that, I would like to thank you everyone for showing a very good response to the Bearish Nifty Trade Bearish Setup 1. If you're not watched, you can see the link given below. I'll also be tagging that so that you will be able to see that and then use that setup. Uh, And for because of the good response, I'm encouraged to create another setup on bearish market. So this video is all about that setup too, which is on the bearish market, right? So you would have always noticed that in a bearish market, the first few candles are hard to get a setup for entry, right? So you'll be missing easily 60 to 80 points that I'm not able to take entry. And the next things, I'm not sure that I'm really clueless whether to continue with the down market, take a sell entry or a buy entry, or take a. I mean, basically, I need to look for a continuation or a reversal pattern. So little bit confusing. So this setup will help you to take a entry on a continuous pattern or in the reversal pattern. So let's discuss further on this one, right? So the rules are as given below. So basically, to make sure that the 1 hour downtrend is trading below EMA 21 days. That's the first rule. And the second thing is, as I said, the first downswing covering 60 to 80 points and also, right? So this is where we are not able to capture the market or make a entry. Then we end up not able to take entry, thinking that it might go and hit the stop loss, right? That is what we always think. So after the first downswing covering this many points and market kind of halting there, so leave it for some more time. Basically, allow it to create three upswings. I'll show you the chart later. So what basically does is it creates three upswings after the first downswing, and that we have to wait at least for 1 hour, 2 hour, so that the market makes these three upswings, and on a trend line. Basically, it travels on the trend line, and at the end of the three swings, it breaks this trend line. Also, it also breaks this EMA 21 day. And these two steps are very important to find out whether it is continuing the downtrend or is going to go give a reversal. So this is what the once it breaks the trend line, take entry, and the target would be the same length that has given in the first downstream. So that would be the target for us for this entry, and then exit at the end of the length, right? And basically, it is called a bearish black button. We are aware of it, but that exactly that in Nifty how it works, and then how to kind of collect the number of points. It is what is mentioned here, specifically for the Nifty purpose. And this is what the continuous pattern, right? So but after forming three upswings, if that doesn't close below the trend line, causes the macro reversal. Basically, it'll cover, as I said, it'll give 60 to 80 points down, and then it also creates three upswings on a trend line, but it doesn't come and close below this trend line, causing, if it goes up, and then we can take this fourth swing, you can take an entry at the end of the green candle, so that you'll be able to capture the trend reversal and complete the swing and the upside. So this is what we are discussing about Nifty intraday setup, bearish market of setup number two. So coming to the chart to show the some of the back testing that we have done it, right. So to like what I've done is I've kind of marked the market range which is trading below this upper trend line and below this EMA 21 line, right. So this is what the range I've kind of highlighted with this color, so that we'll be able to see how many entries we got it in the last few days, right. So let's see how many entries we got it, right. I'm going to the 5 minute chart. So you can see that, like, let's take it like in the just day before, we exactly see market came from 460 and till this one, right. 460 to 96, basically 50 to 60 points it came down. And you can see swing, this is the first swing, it is coming down and it is creating upswing, one, two, and three. And the third one, it breaks, it travels on the trend line and it breaks the trend line. Also the EMA 21. So it both all the condition matches. So if you see exactly the number of points we are collected is same as this. Almost we got the same number of points. We got the same number of points, right? So that is one setup. Probably the second setup also, it traveled the same way, right? It traveling on the same day. It is traveling on the same on the trend line. Swing one, swing two, swing three, and it breaks. And it breaks, it all satisfies. But the thing being, the end of the day, we can consider this for the next trade setup, like how many points it is going to give, and then reversal. So what market did, it exactly gave the same number of points and reverse, market reversed. So this can help us to see how much it market can go down, and then can we kind of see if will it continue or not based on the next pattern that is forming, right? So that is two setups that you have seen it. And third setup, you can see it here actually. So market came down, and one swing, two swing, third swing, and it breaks. It matches all the conditions, but it did not give the target on the same day but in the next day. So we clearly need to decide that should I carry it forward or not based on the confidence that you have it on this setup, right? So you can see that it exactly gave the target in the next day. So it depends on, like, should I continue, we cannot really kind of expect some of the times that it is giving the target on the same day. If you are confident enough, you can carry it forward to the next day to close it, right? So that is another setup that you found it. And here again, right, so it has come down 60 points from top, and then one swing, two swing, third swing closes and matches exactly and gives a target. And again, it has given the same day, it has one, two, three upswings and closes below this trend line as well as the EMA 21, and it has given the target of this much. So this is about, like, the continuous pattern. We are talking about the biggest flag, and then it has given so many days, so many times in last 2 3 weeks, and we have seen, right. So coming to the back testing of the reversal pattern that we are seeing it. So there are a couple of days that has happened that way. We'll see that also, right? For example, see, you can see it came so much down, and it has given one swing, two swing, three swing. It went up to the above moving average, but it could not clearly close below this one. It could not really close this one. So in that case, we can wait for this the last swing getting broken after the three swings. Once it breaks, we can go for entry, and we can go with the long side. That is one setup. And you can see this again a trend line, small trend line, one, two, three swing, but it could not close the trend line, and a reversal, make a entry, and it market went up. So we have discussed two patterns here. One is continuous pattern with a bearish flag, and second one is a reversal based on the bearish flag, but not breaking the trend line and going up, right? So, like, probably for the continuous pattern, you can go with your full capital, whatever you're trading with. And the reversal pattern, you can obviously reduce the number of lots so that you'll be able to risk lower, so that you'll still continue, I mean, still do the trading on that day. So this completes the both the setups that we want to talk about today in the setup number two for the bearish market. And hope you like this really like this video. Subscribe, share with your friends, and like the thing, and you can leave a comment below so that I'll be able to cover it in the next videos, right? Thanks for watching the video.